Good set of results. The market liked it. You did identify the euro as being a headwind. My first question is very natural to a CFO. Are you doing more hedging? How far out are you hedged? What is the financial impact of the strong euro on your business and the consequences?
Well, indeed, it's more the weakness of the dollar than the strength of the euro, which is an issue. We prefer, obviously, a strong dollar because we tend to export many brands from Europe to all over the world, in particular to the US. And as a consequence, a weaker dollar is an issue. 1% of variation of the parity euro-dollar has an impact of 17 million euros on our profits.
Yeah, so weak dollar, strong euro, whichever one you put in the driving seat, have the moves been big enough, drastic enough, long-lasting enough for you to change business plans, change hedging strategies, or is it something you just roll with?
You know, in the last few years, we've lived with a euro parity with the dollar between 1.05 and 1.60. So we are accustomed to it. I think financial hedging can be a technical option during a while for 12 months, but our main answer is a business answer. And we are a global company. We can absorb currencies volatility. We are focused on the organic growth of our business, and the good piece of news is that our top-line growth is accelerating thanks to a more diversified sources of growth. More countries, more brands are contributing to it.
Let's talk about the brands. You've got 13 major brands, I think it's referred to. 11 of those last year were in growth mode. A lot of that came from innovation. I suppose what we want to know, we've seen the results, but where is the innovation? Where's it going to be delivered? Which products are we going to see innovate the most on?
You're right. Innovation represents 1% of incremental top-line growth. So it's 1/3 of the growth of Pernod Ricard, which is coming from innovation. So some innovation is linked to the core brands. For instance, Jameson Caskmates, whose end of aging is done in beer barrels, has done fantastically well, in particular in the US. It is priced at a higher price point than the Jameson Original. So it's good for volumes because it delivers incremental volumes. It's good for the margin because the pricing is higher. And it's good for the brand equity because it strengthens the brand equity. We also had in tequila, Altos and Avión. We had Lillet, our aperitif wine. We have Absolute Elix in the high-end the vodka market. So many innovations which are now becoming more powerful and delivering stronger growth.
So that's where the innovation is. In terms of the two brands that didn't deliver growth last year, Chivas Regal and Royal Salute, what are you doing there? How can you reinvigorate those?
Well, in Chivas in particular, indeed, we posted growth in 50 countries. The main issue is linked to China and the US. And in China, you know, the growth was back for Pernod Ricard thanks to Martell, which is quite positive. On Chivas, we have a solid commercial and marketing plan to improve the performance going forward. You know, the growth we had in China in the last 10 years on Chivas was driven by a fashion, which was Chivas plus green tea. Like every fashion, it came to an end. We now need to build some stronger foundation for Scotch, blended Scotch, to be stronger in China. And I think we have a solid marketing plan around an activation with the NBA that is going to start in the next few days.
You mentioned Scotch. The pound is getting pummeled. The euro strong. It depends which way you want to look at it as a CFO. I'm sitting in London, you're in Paris. Is that really accelerating your numbers for Scotch?
Well, the weaker pound, because of the Brexit announcements, indeed is good news for Pernod Ricard, because 25% of what we sell worldwide is coming from the UK, in particular Scotch and gin. Whereas we only sell 2% of the group net sales within the UK. So net-net is positive. That said, we want to keep a strong pricing. We want to keep brands at a premium level. And so it's not, we don't want to reinvest the weaker pound into a price reduction. We want to keep strong pricing on our brands.